Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 28, 2021. I want to talk about one of my favorite stocks. It's Anaplan, ticker symbol PLAN, plan. So they're into technology, software infrastructure. So with that, normally everybody wants to transform their business and they want to see what the forward-looking plan and how to really run the business. So even with the pandemic in place, I think there is a lot of supply chain disruptions and a lot of disruptions in the COVID vaccine delivery. And this company can really help you to streamline your planning and make sure there is no shortage and you plan for it and take it from there. So with that, let's jump into this company a little bit and see what this company does. From a financial highlight perspective, their revenue is 130 million, up 25%. This is for the fiscal quarter 2022, and billings are up. That's a good sign. And remaining performance obligation, also called RPO, it's also up. Dollar-based net retention rate is up. And customers with ARR, annual recurring revenue, more than 250K is also up. These are some great statistics here. And also we got some more here. A GAAP operating margin is positive, non-GAAP positive, and so on and so forth. We'll jump into this and cover a little more. And as you go into subscription revenue growth, as you look at the subscription company, this is a SaaS company, as you can see. We will love to see the subscription revenue growing very nicely. So as you can see here with Anaplan, FY18 144, FY19 209, the subscription revenue grows at a really nice clip, and I like to see this subscription growth. And also, as you see here, quarterly subscription revenue, it's also doing nicely. Very consistent, steady eddy. So I love to see the quarterly subscription growth. And also, as you can see here, the year-over-year growth here. So overall, I feel like companies doing pretty nicely, and I think they are not getting enough love from Wall Street. This is where we can see, is it a good opportunity? Can we invest some? And what's the upside potential for this company? From a company profile perspective, Anaplan provides cloud-based connected planning platform. Everybody loves to have a connected cloud-based platform because planning is very key in these large organizations and even small for that matter. And this platform has got in-memory data storage and calculation. You can do a lot of this what-if analysis and see if your business is ready for any catastrophe or shortage or any of these bottlenecks that you can think about. So that's the great thing about this, and they can do planning for the finance, supply chain, sales, automotive, human resource, you name it, they can help with that. And I think company also delivers application over the internet. It's a completely SaaS play. That's also good. And the CEO here is Frank Calderoni. He's a seasoned veteran and he knows how to run the business. And from the market cap perspective, as you can see here, mid cap, still a lot of room to grow. Market cap is 8 billion and stock price is 55. So I love to see these mid cap companies and catch them a little bit early on and then see them blossom. So with that, if you look at the 3-year stock chart here, as you can see, the stock has done nicely from the get-go, then dropped a lot. This is the COVID related issue. As you can see here, I think they did not give out a forward-looking guidance. Very much understandable. That's why stock kind of tanked a lot during the COVID. This is back in April last year. Then stock took off very nicely, as you can see here. And now, since January, stock has been falling off a little bit. I think now it's trying to make a comeback here. I feel like anytime stock does this huge drop like this, it's a good buying opportunity. It happened back here in September of 20. I think it's back in 2018 or so. Then again in 2020. It's again during the COVID time and again, and I think this company has a track record. It knows how to pull itself back and bounce back again. And from a CEO, Frank Calderoni, he's a CEO of Anaplan. He's also chairman of the board of directors. He's a technology veteran, over 30 years of experience. He had been with um, at multiple companies, as you can see here, Red Hat, and he was also CFO at Cisco, and multiple companies. He was at QLogic and ScanDisk. He's a veteran, in the high-tech space. I think he can really help the company steer clearly into the success. From a news headline perspective, as you can see here, folks are wondering, Insider Monkey, they're kind of debating, is Anaplan a good stock to buy? And they also have positive product news here. They got a Plan IQ to bring advanced intelligence to everyday business users. That's a great news to see. I think they want to have this planning as a key advantage for any business and really thrive in this post-pandemic world. And I think one of the reasons stock dropped is they had a wider loss than expected back in May 28. That's why stock dropped a little bit. And I think that's the main news here. So what we have to do is really don't worry about earnings too much. Look at a little bit longer term picture and see if the company is worth buying. I feel like company doing the right thing. They got this Plan IQ, and they're really helping enterprises, big and small, with planning and prepare the enterprises for any catastrophe or even any success as you go forward. So with that, any company that we analyze, we got to look at key competition and see how the competition is doing. With that, let's look at Anaplan and its key competitors. So as we look through here, we got HubSpot. These guys are into mainly marketing and CRM, customer relationship management area. This stock has been rocket ship, as you can see here. They've done nicely in 5 years, 1,196. I also recommend to buy this company on any pullback. It's a great company, really young company. They are competing effectively with the likes of Salesfor.com. Then we got Oracle here. Oracle has been doing nicely in last 1 year. As you can see here, they've done 46% in 1 year, and they've done 5 years for 117%. So Oracle is a Larry Ellison's company. Anytime this company drops, I would recommend buying some. I think this company can do well also. Then we got Workday. Workday has been cooling off a little bit off late, as you can see here. They're down 14% from 52-week high. Great human capital management company. I would buy this company also in any pullback. IBM, I think with the new leadership, I think IBM is it's getting its groove back now. I think this company is also a good one to buy on the pullback. Right now, I think stock is doing pretty okay with the new leadership. Salesforce, Mark Benioff's company, I think it's a great company. They bought Slack. I think Mark has got a great vision. He wants to know where to take his company. He's acquiring very strategically. I like to buy this company. Right now it's down a little bit. I would love to buy this company at this point. Next is our company that we are talking about here, Anaplan. Anaplan is a great company, $55 stock price. As you can see here, they've dropped most out of these companies in from 52-week high. They're off 36%. So I would love to take this opportunity and buy some Anaplan and position for long-term portfolio appreciation with this stock. As you can see here, they've done nicely from a quarter over quarter sales perspective, 25% growth, nice gross margin. Net margin is negative right now because they're not making money yet. They're investing in themselves to really, make this company a great company for the future. Then we got Paycom and SAP here. Both of them have done nicely. As you can see here, for 1 year, Paycom has done 16%, SAP has done 4%, and they're also down big from their 52-week high. I love to buy SAP on any pullback. This company normally, after the quarterly earnings, many times the company drops. Those are the good buying opportunities for SAP. And Paycom also, it's a very volatile stock at times, especially during the earnings. I would buy this company on any pullback and take it from there. So out of all these companies here, as you see here, Anaplan has dropped most in last 52 weeks from 52-week high, and companies, as you can see, are trying to make a come back here. They're down 1% in 1 day, 1 week they're up, 2 week they're up. It's trying to make a comeback here, as you can see from this performance. Next, we'll jump in and look at quick statistics of Anaplan and see how is this company doing. From a analyst perspective, looks like Goldman, they have a neutral rating on the company with a price target 60, which is above company's price of $55 right now. And Wolf Research back in April, they have a rating of $72. Then we have an upgrade from Morgan Stanley, $100 estimate. So overall, you can see some positive vibe here. I feel like company is doing nicely. We should really take a look at this company and buy some and hold for a long time. From an earnings per share perspective, clearly this is an early stage company. It's investing in itself. That's why it's not showing any profit. Earnings per share is negative, but I think it's kind of stabilizing here, which is a good sign. Next, we got sales. I love this sales clip here, all the way from 2017 till 2021. Nice clip here. Sales is growing. I love to see sales growing. That's a positive indication that companies really grabbing the market and helping the customers do planning. Then we got sales outstanding. I think it's a nice clip again. From a sales outstanding perspective, shares outstanding perspective, we don't want to see a heavy acceleration. It's pretty steady, Eddie. There is some increase in shares outstanding, but pretty much manageable here. Not a red flag for me. Then we got fundamentals here, Anaplan, $55 stock, $7 billion market cap, almost $8 billion, as you can see here. Nice sales. They got trailing 12 months, $474 million in sales. Nice sales growth on a yearly basis and quarter over quarter. Nice gross margin, very good. They don't have too much debt, which is manageable. As you can see, your RSI is 58. It tells you buy moderately, which is a good sign. A lot of institutions are owning this company, and overall performance is pretty good. They're trying to get their groove back here. 1 week and 2 week they're up, but they're down 26% from 1 year, 36% from 52-week high. And from a stock perspective, volume perspective, nice volume. So we don't need to worry too much about liquidity. It has the liquidity, nice trading volume, even 1 day, last Friday, as well as average 3 month volume. They got a lot of cash. We don't need to worry about Anaplan running out of cash. $328 million cash, that's a good amount. They have some debt, which is very much manageable. Free cash flow negative at this time, which is okay for these early stage companies. They are spending money on their own R&D. As you can see, they're coming up with Plan IQ. They're also working with Amazon.com on their forecasting. I think they're spending money in R&D, which will really help to distinguish themselves in the marketplace. And they're above their 20-day moving average and also above their 50-day moving average, but below their 120 and 200-day moving average. I think as you go forward, the stock can really cross over 120 and 200-day moving average. It can really become bullish. Cash flow is positive, that's good. Earnings per share is negative. Company is really investing in itself and not showing any profit yet. So with that, let's jump in and look at the fundamentals here. As you can see here, stock price is 55.34, market cap is 8 billion. And as you scan through this year, the way this chart is organized is I got all the quarter ending dates here on the top, and I got key statistics on the rows here. So let's step through one by one here. From a market cap perspective, it was a $3 billion company back in 2019, grew to 5, 7, 6 billion, 7, 5. As you can see here, stock kind of bounces back and forth once in a while, but overall there is a positive trajectory and acceleration. They came all the way from $3.9 billion. Now they're an $8 billion company. Nice market cap acceleration. That tells you this company is really gaining the market share and really helping the customers do planning pretty nicely. From a price perspective, it was a $31 stock back in 2019. Now it's a $55 stock as of now. So there are ups and downs along the way. That's why I love to buy this company when it's down like right now and invest for long haul. From a sales perspective, as you can see here, this company knows how to grow its sales. Sales was 69 back in 2019, 76, 85. So see here, sales is really growing nicely. I think that's a good clip of sales growth. And sales quarter over quarter change. I love this number here. They've been, positive from a quarter over quarter sales perspective. It's a growth company. They've been growing nicely. 44, 41, 36. There is some up and down as you can see here, but still growth is positive. That's what we would like to see. From a revenue surprise perspective, they've been surprising the Wall Street every single quarter here, with the 5.54 back in 2019 all the way to 2.75 back in April, May time frame. I think overall, from a revenue surprise perspective, this company is a steady eddy. They've been giving the surprise all along. From a earnings per share perspective, as you can see here, it's a negative. They're not making money, which is understandable. These are early stage companies. They have to invest in themselves. From an earnings surprise perspective, they've been giving a positive surprise all along. But last quarter, back in when they announced in May, they have a negative earnings, per share. That's why stock tanked a little bit. I think this is a good opportunity for us to come in, buy some stock, hold it for a long time. From a cash perspective, nice cash position. So as you can see here, they've been maintaining around $300 million cash all along. Debt is pretty much consistent here, nothing to worry too much. It's around $50 million consistently, 40, 50. That's a, they know how to manage their debt. Cash flow positive last 2 quarters. That's good to know. They got operating cash flow positive also last 2 quarters. That's also good. Nice gross margin. It's mid 70s. That's also good. SaaS companies, we love to see some good gross margin. This company has a good gross margin. Net margin and operating margin negative at this time, which is very much understandable. Company has to invest in itself and make sure its product is stands up against competition. Price to sales perspective, it's not too expensive. It's okay compared to SaaS companies. And ROA and ROE both are negative. Companies really not showing any profit yet, which is understandable. So with that overall, by looking at this chart, you can get a nice indication of what company is doing and how they are trying to pull away from the competition. The things that I look for and care for deeply is how is the sales growth. That's a pretty nice clip. It's a growing company. They've been surprising Wall Street. Wall Street loves predictability. This company is really surprising them on the revenue. That's good. Nice gross margin. I think those are the key statistics here. And these early stage companies, they have to spend some money on themselves. That's why don't worry too much about margins at this time. There is a sales growth. I will take it from there. And even if you look at rule of 40, as many people say, if you look at the sales here, 25%, look at the gross margin, if you add those things up, clearly much above rule of 40. I think that's a positive indication. So with that, let's jump into Anaplan's recent earnings transcript produced back in May 27th. So big news here is really earnings of 10 cents missed by 1 cent. It's really a very small miss. That's why company share dropped a little bit. And on the revenue side, they were surprised by 2.75 million. That's a good story. So this is the eye chart. We will not look at each and every single thing. I will highlight few things. You can look at this, at leisure. First thing is really steady execution, healthy new customer growth. They got over 1,700 customers, 1,700 customers. That's a good news here. And also, as you can see here, they got 473 customers with annual recurring revenue more than 250K. That's a good statistics. Companies have to have bigger customers with the ARR above 250K. That's always good. Companies knows how to grow the annual recurring revenue, which is a key statistic for any SaaS business. Billings grew 32%. That's a great news. And as you see here, they're also making inroads into new areas. As an example, they made an impact in automotive. This is where, as you can see here, all the automotive business, they're electrifying, they're going to autonomous. There is also shortage. This company with their planning platform, they can help to really sustain and grow this emerging automotive market with the electrification and shortages. And they have a huge auto suppliers over $40 billion. They selected Anaplan for the planning. That tells you this company has got some good solution here. Any sales folks you talk to, they love Anaplan's platform because it's easy to use. They can do lot of planning, what if analysis, and see what plan makes sense, what does not make sense. And again, one more automotive player back in Europe. That's also a good story. And revenue is up 25%. That's great. And they are delivering year-over-year growth. That's a great story. And as you scan through this here, I think they're doing nicely. We'll touch on one or two things here. As you scan here, I think they're also talking about they're giving some raising the guidance for the future with I think 555 million to 560 million. That tells you company really thinks they can do nicely as you go forward. So overall, by looking at this, I feel like company are doing great, and they're also investing in themselves and really taking market share. So with this, looking at this, I feel like company doing a good job. They're not getting enough love from Wall Street, but they're really churning day in and day out, making positive impact and really growing their platform nicely. So with that, let's now look at performance of this company and see what we can make out of it. From an annual performance perspective, as you can see, they've done nicely. 2018, when they became IPO, 15%. 2019, 97%. That's a great growth. 2020, with the pandemic, they've done nicely, 37%. 2021 is when they're stalling a little bit, 23% down. So this could be our opportunity. Let's jump in and see a little more detail. From a monthly performance perspective, as you can see here, this stock goes up and down a lot, so we don't need to worry too much. Our opportunities when the stock drops. As you can see here, back in September, down 13%, recovered completely, and then we have again one more drop, recovered, two more drops, up, drop, up, drop, again up. So anytime you see such a drop here, we got 3 consecutive monthly drop here. Stock tried to come up here. I think this is our opportunity here. If we buy it here, I think with the company doing nicely, growth rate is there, I think we can profit from this company as we go forward. So if you look at weekly performance here, as you can see here, quarterly earnings back, in this week here, stock dropped, some more drop. Now it's trying to recover, as you can see here. I think that's where we come in and buy and hold it for a long time. And then the quarterly earnings back in February 21, stock dropped a lot. They try to recover, as you can see here. So this company is no stranger for a couple drops here and there. Then they will always come and bounce back. On a daily performance perspective, as you scan through here, it's been kind of steady eddy. There are big drops. All these big drops are buying opportunities. Stock was $49 here, big drop. Stock recovered nicely in a couple days. It's 50, 53, as you can see here. So the punchline here is really, don't worry too much about stock drops in this company. All the drops that you see here are buying opportunities, and company will really do well with the Frank Calderoni's leadership. They are really expanding their product capabilities and launching new products and really gearing up for post-pandemic planning for all these big organizations and small organizations. So with that, let's look at a monthly chart here. The way to read this chart is I got all the years on the top, 2021, 2020, 2019, 2018, as you can see here. And I got here what's the yearly performance, what's the yearly high, yearly low, and all the months, all the way from December to January. So as you scan through this here, you can use this chart to do multiple things. One, you can quickly scan through and see any seasonal pattern that you can see. One thing you can notice here is really sometimes around February, March time frame, this company can have some weakness. So as you can see here, weakness back in 2020 and a little bit weakness back in March, a little bit low growth here, performance here and April. And after this year, back in 2020, nice acceleration. So in 2021, the chart may not repeat, but it always rhymes, as they say in Wall Street. So as you can see, it did not repeat completely yeah, the performance of 2020 in 2021, but instead it's showing a little bit variation. So that's our opportunity here. We could jump in at this time and buy some and gear towards a nice profit as we go forward with their new product launches. And back in 2019, as you can see here, somewhere in August September time frame, and see here in 2020, that is October, we can see some weakness. That could be another buying opportunity. And then they got one more small weakness area sometimes in December time frame. So that's why I would love to buy this company. And one thing I also noticed is really look at the difference between high and low, almost 50% difference. So that's why this company is a good one to buy on this any downturn. It got good variation. It's not a non-moving type stock. It knows how to move up and down. That could be our opportunity to really trade. And even if you're a long-term investor, buy when it's down like right now and hold it for a while. So one thing to look at here is really from an insider trading perspective. Uh, it's a little bit surprising for me to see this company's insider. They are not afraid to sell. They've been selling, as you can see here, 11th June, 11th June, 10th May. They've been selling significantly. This Martin David Jr. he sold $1.7 million. Frank Calderoni, the CEO of the company, he sold he sold $2.4 million worth of share. Then we got Martin again, Calderoni again. One thing I see is really these execs are selling some. There may be some reason behind it, but I feel like it's a little bit on the higher side. Something to take note here. But I'm not super concerned because looks like these folks have been selling in the past also. Back in December they sold a good chunk of share. Because these are early stage companies, these insiders have too much shares. They at time to time they want to lighten up a little bit and have some money for their own personal purposes, which is understandable, but it's a little bit on the higher side, but it's okay given it's an early stage company. Next, we'll look at the chart here from a technical perspective. As you look at the chart, nice looking chart. This is a 5-year weekly chart. I wanted to see a longer term horizon before we jump in. So earnings, stock went up, earnings, stock went up, earning came down. So earnings came down, earnings came down. As you can see here, anytime it comes down like this, here, it always goes back up again. So here now it came down, as you can see here. This is back in 2020 during COVID times. This is recent earnings, but it will always try to make its comeback. So I feel like we caught the stock at the right time. It's trying to take on its 9-day moving average, which is the blue line here. It's 9-week moving average here, the blue line, and slowly it can use that as a support level, bounce back and take on other moving averages. That's good to see. RSI is kind of trying to stabilize here and improve. Um, um, the IV percentile itself is 41, so it's okay to buy call, but I would probably buy stock itself. You can also buy call if you want to. And from a DMI perspective, I think as you can see here, the blue line is trying to go up here. That's a good sign. Red line wants to come down. At some point in the future, we can expect a bullish crossover, the blue line crossing over red line. That's a positive indication. Volume average going up, that's a positive indicator. People are really buying into this stock. Check-in money flow also tells you money is flowing into the stock. That's why it's going up. So overall, I feel like we caught the stock at the right time. It's a good time to invest in Anaplan. Next, we will look at a 1-year chart here. As you see here, drop, stock went up, drop, stock went up, drop. Stock is trying to make its way up now. So RSI is gaining momentum. That's good to see. Still below 50, so it's good to buy even now. And DMI, I think it's turned positive in the daily chart here. That's a mildly bullish indicator. I would love to see the blue line even making its way higher, but at least it's above the red line. That's a mildly bullish indication here. On the balance, volume is going up. That tells you people are buying this stock. That's a good sign. And check-in money flow is really telling smart money is flowing into the stock. That's always good sign. So with that, from a technical perspective, by looking at both 5-year weekly chart and 1-year daily chart, I feel like companies trying to make a stride and try to go up slowly. Now we'll look at the option chain here and see what option market is telling us. So as you look here, stock is $55 stock here, and as you look at the call volume here, open interest is one thing that we'll see as you go into this is November, 145 days out. You can see a lot of call volume at 62, 65, even 70, 75. So folks are really betting the stock will go up to 60s, 60s and 70s in a couple months in November time frame. And if you look at the put volume here, there's some put volume. People are trying to hedge against the loss. There's nice put volume at 42, 45, and so on and so forth, which is understandable. People are really trying to buy some collar or some insurance against stock dropping. But I look at the volume here, nice steady volume, in the 60s and 70s range. That's a good indication. Next, we'll look at the option statistics here. As you can see here, call volume is 1189 and put volume is a meager 230. So we love to see more call volume and less put volume. That makes the put call ratio 1.13. That's a bullish indication. That tells you more and more people are really buying the call and really expecting the stock to go up. That's a bullish indication. So with that, what should we do now? We looked at fundamentals, we looked at the technicals. What should we do now? So by looking at this company, and if you look at all this post-pandemic world, everybody wants an enterprise-wide planning application. So that helps you to position the company, above the competition. Anaplan is really helping companies to plan globally, especially with the supply chain issues that we have right now, and they're leader in this space. I think that's a positive news for this company. They know how to do planning. And using their platform, they've demonstrated ability to land and expand. As you see here, 64% of the new bookings came from the expand sales. This is a very important statistics in the SaaS businesses. Companies have to learn how to land and have the customer base and then expand and cross-sell to them. I think this company knows how to do it. That's the key to success in the SaaS business. And the billings grew 32% year over year. That's a key metric for any SaaS business. I see the growth here. And they're also expanding to new industries. They started with the high tech, now they're going into automotive, healthcare, and any industry that requires planning, which is all the industries. So that's the good news. This company is really growing and taking the market. And they also have this new product launch, Anaplan Plan IQ with the Amazon forecast. I think that's the great news. I think it knows how to collaborate with the bigger players like Amazon. They also have artificial intelligence, machine learning. That's very good. I think companies in this post-pandemic world need to make the plans, look at what-if analysis, leverage AI, ML, which is artificial intelligence, machine learning, to distance themselves from the competition and really succeed. And they also raised their guidance for 2022. That tells the conviction and their ability to grow. That's a good sign. So with all these statistics here, I feel like stock is oversold at this time. It's a good time to buy. and stock has a great upside potential, and it has a great leader in Mark Frank Calderoni. So with that, I would buy the stock myself, and hold it for a long time for a nice profit potential. So with that, thank you very much. Happy investing.